Okay, welcome back. So things are a little quiet out here. 140 lower is what you have. 22,300, just under that level is where we find ourselves on the index. Amit Jeswani is now with us, founder and chief investment officer at Stallion Asset. Amit, good to have you with us here. Good afternoon. Thanks very much. We'll talk about the broader market, etc. But you're one who sort of shares what you've done in terms of your portfolio, etc. And we've always had a nice time talking about that stuff. So let's begin there. Amit, last time you were on, you were saying that your one sort of mantra is growth. The highest possible growth at the most reasonable valuations. So let me ask you. I believe you've added DOMs in your portfolio. That's one of the sort of latest additions. Talk to us about that. What are the prospects? Where are valuations? Go on.
So, Prashant, we've added DOMs. Good afternoon, Prashant. Thank you so much for having me on your show. Yes, we've added DOMs. We expect DOMs to do profits of 150, 155 crores in FY25. It's the market leader in stationery. So first of all, whatever I say, we have vested interest. Me, my clients, Stallion Asset is a PMS company. Me, my clients, my family, we all have vested interest in whatever I speak. This is just for education purposes. These are not recommendations at all. But yes, coming back to DOMs, yes, we've added that to our portfolio. We believe DOM should grow at 25% plus. It is reinvesting 100% of cash flows at 30% ROIC. See, in this industry, Hindustan Pencils is gone. Cocayo Camlin has gone, as in they've not been able to scale at all. Cocayo Camlin has not been able to scale at all. DOMS, on the other hand, has grown at 27% CAGR for the last 10 years. And they've consistently reinvested capital at 30-35% ROICs. And if you fundamentally think about it, there are very few companies in the country. Like DMart reinvests 100% capital at 22-23% ROICs. At 100% reinvestment rate is of Varun Beverages at 27% ROICs. Very few companies in this country can so we want the exceptional best quality. And when you have these kind of qualities, you have to pay up a little. And we've paid about 60 times, 65 times FY25, FY24, and about 50 times FY25 for DOMs in our portfolio. But I believe it's like a proxy FMCG bet. How many FMCG companies are growing at 25%? The only ones that are like Varun Beverages is one, but there is no other FMCG companies. When DMart would grow at 25%, DMart would get 100p. Now also it gets 100p, but when you get FMCG like businesses that are growing at 25%, you get with high ROC. So you get high growth, which assures you decent returns, and you get low drawdown risk. You just don't want high returns. You also want very low drawdown. So that is how we have DOMs, and we've added DOMs to our portfolio.
Okay, all right. Amit, just hold on to that thought. There's some source-based information coming on DLF's launch of that Privana West in Gurugram. They have sold close to around 800 apartments of around 6.5 crores each, and the entire project is sold out. Wow, talk about demand out there, big demand out there. So the stock is still under pressure, but that's the big headline down there. That project that was launched a week or so ago, it's completely sold out. Well, Amit, good afternoon. Welcome to the show. But let's talk about Polycab. I believe that's one of your top holdings right now. Tell us, when did you add? Did you already have the stock in your portfolio prior to the entire income tax news that came out? And did you all double up your position, or was it a fresh entry post the fall? Tell us more.
So Nigel, good afternoon, Nigel. Nigel, first we bought Polycab by selling our Godrej properties at 1,200 rupees was Godrej property, and 800, 900 was Polycab. This is about 3-4 years ago. That is where we added. We sold Godrej properties at 1,200, and 900 we bought Polycab. We were holding on to Polycab till it was at 5,500, and when that news came, we sold. We had 8% weight through the portfolio. When that news flashed, risk management first, we sold till at 5,300, 5,000, like those levels. We got it down to 4%. When the news came out, the stock, when PIB letter came, the stock was at 3,800. We didn't touch because we were too scared. But when the results came out, the day the results came out, and KPMG, the auditor, BSR and Co, gave a green signal that there is no problem in Polycab's book. And you were getting Polycab at unbelievably reasonable prices. So we believe the risk reward was in our favor at 4410. We made it from 3% because when the stock goes down, your weights go down. From 3%, we made it back to 8%. And since then, we are riding. Hopefully, now KEI has come out with numbers. The growth of KEI is 19%, and KEI is trading at 60p. RR Kabil should do 300 crores of profit, and market cap is 18,000 crores for RR Kabil. Last quarter, RR Kabil did 11% growth. So 60p is where RR Kabil is. Now, my base case estimates for Polycab is 1,800 crores PAT, and my best case is about 1,850 crores PAT. So basically, if that happens, Polycab right now is at 88,000 crores market cap. That means Polycab is at 48 times. And being a market leader, and it should grow at 25-30% plus. It should be the fastest growing guy. So no reason why this discount should be except for that income tax problem. Yes, so let's see. I don't think this discount will last for a very long time. If the results are 25-30% growth, the stock should move even higher towards 7,000.
Amit, hi, good afternoon. I recall our last conversation very well, and the underlying sort of thought process was that you want to go for growth, and you're not going to compromise on that. You're going to go for sector leaders and the ones that are, growing the most. So, just for the benefit of our viewers, I mean, some of those holdings, at least you had, up until early April, there was Trent, there was Policy Bazaar, Zomato. Stocks like Angel One, MCX, Nuvama, and many of them, in fact, most of them have done exceedingly well. Now, my question, given the current market setup and this jitters on election, volatility, mid caps are cooling off a little bit, are you taking profits anywhere? Or are you just happy to add in this portfolio that otherwise has been red hot, running super strong?
So we've cut some Angel in our portfolio. We were getting a Lamborghini. We had to settle for a Mercedes in Angel, but Angel, we've cut about 70% of our allocations, 80% because of the QIP, IPL, and somewhat little slower growth. So we were making more money. We were getting a Lamborghini, but we had to sell to a Mercedes and still be happy.
Okay, just hold on. We'll come back. There are more questions on the Mercedes, the Lamborghinis, and everything else that you're driving. But before that, we've got Mangalam standing by. Titagarh Rail has been surging in trade on the back of a Morgan Stanley note. So let's just quickly dive in and take a look at that stock as well. Mangalam, what are you picking up?
Well, Titagarh Wagons has already seen a big rally over the last couple of years, but Morgan Stanley believes that there is some more as well. They've initiated coverage with an overweight rating. The target price that they have is a whopping 1,285 rupees. They see strong evidence of revival in India's railways, as well as believe that Titagarh is a large beneficiary of that. In fact, they view their freight business as a cash cow for the company and passenger business as a new growth engine. The management multiple times have told us as well, while their order book is 50-50 freight passenger, currently the revenue that they get is 90% from freight and 10% passenger. So this becomes a growth engine for them, pun unintended. They forecast, Morgan Stanley, that is a 28% earnings CAGR over the next 3 years, and the freight wagon execution of 1,000 per month will be between 1,000 per month between FY25 and FY27 as against 800 that they saw in FY24 itself. And passenger coach execution will be 26, 76 and 96 coaches per quarter in FY25, FY26, FY27. So all these factors doing well for Titagarh Rail. That stock up 4% as well.
Amit, does railway catch your fancy, and in that particularly Titagarh?
No, so I don't have any railway stocks in our portfolio, unfortunately, because they've made a lot of money, but it's okay, like we've missed out the entire B2G rally. We have no exposure towards B2G, as in it's near zero. So that's why we don't have to even care so much about elections. We are chilling.
All right. But you made a lot of money, I presume, in Netweb, because the issue price was about 500 rupees. The stock is now closer to 2,000 rupees. At what point did you enter, and what's the story behind Netweb?
No, Netweb, we just entered like a few days back. So we entered after the results. We've entered Netweb. So we are yet to make a lot of money, but hopefully we will. Netweb, again, it's into supercomputers. If you see if NVIDIA is still at $900 plus $920. See, there's a very large growth which will come in. It's expected. This is the only industry in India which is growing at 35-40%, and you need a player who can execute right. These are a little riskier bets. This is tailwind investing, And my understanding of tailwind investing is that if you get a large tailwind and a good executor, you end up making a lot of money. Netweb does ROCs of 38% last year. Their total revenues last year was 700 crores. Their order book, which they have right now for the next quarter, because their order book gets completed in like 2 weeks to 3 months, is 400 crores. And their L1 is one more around 300 something crores. Basically, your entire FY24 revenues should be done in the first half itself. And when you have such kind of hyperscaling, such a large opportunity in data centers, in supercomputers and AI related things. So yeah, we've given it a try. We like what Lodaji is building. We have done a lot of background work on it, and a lot of people are saying good things about like whoever we speak to, from the data center guys, from Anand Raj, etc. Whoever's in business, they all use Netweb products, and this trend there. Last year also the growth was 70%. So these are not very large locations; these are smaller locations where if you go right, you end up making a lot of money. If you go wrong, you lose 20-30%, and just say that it was bad strategy and you'll move ahead.
Amit, so they are into server. They make servers.
Yeah, so they import from AMD. They are like partners with AMD, Intel, and Nvidia, and they're like golden partners. So they have all decent access. Like for Nvidia, they're there since 2010, and so there are quality of partners. You have gold, silver, platinum, etc., and they're one of the highest partners for these kind of companies. Even from your Graviton to your IITs, Graviton is that algo trading company you see in block deals every. They are their clients. So a lot of high tech clients are there. They've got super clients. They've added 175 clients this quarter. So if anyone's looking at these are very early stage investments. Their profits are only 70 crores, but the size of opportunity is so large. The numbers are just one company who's doing a Yota, who's doing a 16,000 crore data center capex. So there are multiple such companies. Like Anand Raj is doing very large capexes, and there are so many unlisted companies. So and our feedback has been very strong, and we're waiting for numbers to make decisions. So yeah, we've just added. I hope we make money, but even if we don't make money, it's okay.
You've always also fair enough. That's Netweb. In real estate, I believe, Amit, have you added something?
So we've cut down beta of our. So we cut capital markets a little bit. Our allocation in capital markets 9%. We cut lenders a little bit. So we have to. So whenever we bet, I add beta to our portfolio. We have to cut beta from our portfolio. So our since inception portfolio beta has been 0.77 against Nifty 50. So we are very conscious on that. So for real estate, we've added 2 best real estate companies in India. One has grown at 90% plus. The group got family settlement just done. The growth was 90% on Godrej. I'm speaking about. These are not recommendations, of course. So we've added stocks like Godrej. We've added stocks like Prestige. These are the best quality builders doing 20,000 plus crores of sales, scaling at unreal rates. And the guidance are also very strong. So Godrej trades between 2.5 times pre-sales to 9 times pre-sales. Right now, at 27,000 crores guidance, if you do 2.5-3 times, you're on the lower end of the guidance. So basically, even if Godrej goes to 3 times, 3.5, 4 times, 5 times, you should double your money. Very decent tailwind. See, this is the biggest tailwind this is the biggest tailwind that I'm seeing in real estate after multiple years. And it's not just so the total listed builders, the top 15 listed builders, did about 63,000, 64,000 crores of pre-sales last year. This year, those pre-sales are up 50-60%. There is clear market share gain which is happening by these builders. Most of these stocks are making new highs. We are also trying. It's only 3% of our portfolio, both stocks combined. But we are also trying. See, you have to find new trends, and because the old trends, you've already made so much money. I will go wrong in some of them, may lose 20%, but if I go right, I'll make 200-300%. That's the whole idea.
Okay. All right, Amit. Great conversation as always. Thank you for joining in. Looking forward to the next one already. You have a good afternoon. Let's quickly, thank you. Let's quickly take a break. With the news, the market is trying to find its feet. I mean, the Nifty is still nursing a cut, but it's about 150-point cut, so off the lowest levels of the day. We'll come back on the other side, get you a check on what's happening in dealing rooms, and of course, some final trading calls coming up with Nitish as well.